Hey everyone, welcome to this week's webinar, weekly chat. Today we have our market report out. There we go. And we're going to be doing an overview on this. A copy of this will be in, I don't know where the copy will be. Where will the copy be? Copy will be on our website. There'll be a copy on our website.
Absolutely. And
we're just going to go step by step, give our thoughts on this, what's going to be happening in 2021. Obviously, we are back in lockdown, which I was confused yesterday. Kyle, I don't know if you were confused yesterday about the lockdown. I'm like, what's going on? I don't think anything's actually different. Do you think it's anything?
Yeah, not really. It's just got a little bit more strict in certain situations. You're not able to start renovations now. They've adjusted some of the store hours and things like that. So it has been a few adjustments, but overall, you know, we're still pretty much in the same lockdown that we started. I think it was November 23rd. So
and real estate's still transacting. So yeah, we're in that state of caution that we're staying in. But it was interesting because I walked into the office today and I was congratulating someone on a deal that they recently secured for themselves. And he said, Alex, I'm concerned about COVID. I'm like, I'm not worried about COVID at all. I'm like, I see a light. I know where it is. I know, and this flows in with the market forecast. I know that Canadian population will be vaccinated by September. Or a large proportion of the population will be vaccinated by September. And every month we get closer to September, the outlook will get better and better. Yes, the news yesterday seemed dire, but it was always going to be dire. It was always going to be this way. Nothing's changing. If you go back and read things like, oh, it's going to be a long winter, you think that when everyone starts being inside, there's nothing new. We're just in crisis management right now. But the vaccinations have already started. There are projections, there are timelines. So kind of put, again, the blinder on what you read in the media, people talking about botched distribution of vaccines and everything like that, doesn't really matter that much in the next 6 months. The rollout, we're talking about maybe it's taking a week longer. And again, a week longer can mean a lot to certain individuals, but a week longer doesn't mean anything to Kyle and I because we weren't ever getting our shots in the demographic that we fall into until realistically late summer is where we're going to fall into for our shots. So it doesn't, for the majority of Canadians, doesn't matter. So keep your eye on the prize, keep focused. And speaking of that, let's go into projections. So literally we're going to be reading off this paper. And we'll talk about that. So number one, and we've talked about this before, big cities are not dead. Humans are social animals. Well, we are talking on Zoom over here, but I'm sure there are a lot of people out there watching this that are looking forward to getting back together with their friends and family. I haven't seen anyone, other than when I come to the office. I haven't seen friends or family. I didn't get to participate with anyone at Christmas. I know, Kyle, you were the same way. You didn't get to see family at Christmas either.
Exactly.
We are all social creatures. People live downtown to go to work, be close to work. Well, office hours will open back up. Okay. People like going to restaurants. Well, those will open back up. People like live events. Those will begin again. The infrastructure for all of that is downtown Toronto. I feel like I've said that so many times, beating a dead horse by saying that. But number one, downtown Toronto will regain its appeal and people will come back. There's no questions about that. And we've already talked about how listings are down and lease listings are down and we're seeing lease activity. Everything's bottomed out in pricing. That's already happened. And we know from our brokerage, we just got the email out today. So when I talk about our brokerage, we have our remaxwealthbuilers brokerage, and then we have our parent brokerage, Remax Condos Plus, which has over 150 agents, was their best sales month in 2020 was December. That was the best sales month. And our focus as a parent brokerage and as a Remax Wealth is condo sales. So we just had our best month in December, which is historically one of the slowest months in real estate. it is coming, and the amount of investors that Kyle and I are working with continues to grow every day.
And that was during a second lockdown as well. It's not like COVID just resolved all of a sudden. This was during one of the most aggressive lockdowns that we've had.
Yeah. And this is where this is the opportunity that people, so we talk about leasing activity. This is the opportunity for people to secure a low lease for 2021. So if we go now by the vaccination schedule, okay, well, we know the majority of the population will be vaccinated by September. September is usually the busiest month for leasing, followed by August. So June, July, August are busy months. You'll see leasing demand go up, which will then mean prices will start going up on the leases this summer. So why wouldn't you want to secure something now and then enjoy that low rent and then spend it on all the restaurants and live events and those activities, which will slowly start coming back this summer? It is all going to happen. There is a light at the end of the tunnel. So keep that in mind. And number two, work from home is not for everyone. Me, I'm at the office. Office hours are still needed. Guys, I talk to so many people. That's my job. Kyle talks to so many people. That's our jobs. I talk to executives. They are my clients. They are in these office towers. People are dying to get back to the office. You don't understand. And we also added people being a social animal. There's a social aspect of going in the office. It will not go back to 5 days a week. There will be some sort of balance between the two, which again, I'm beating a dead horse. We've talked about that so much, but the office towers are going to come roaring back to life. And that's evident by the amount of office construction that's still going on. If you follow the news, there are still office developments being planned and that are scheduled to break ground into the future. And then we have it right in our newsletter. And this doesn't make headlines, but I know Amazon just committed to lease another 100,000 square feet. And so did Shopify, committed to leasing another 100,000 square feet in downtown Toronto. These tech companies are still maintaining an office space and presence and increasing their footprint in downtown Toronto. I know exactly where both these offices are. One's at Spadina and Front, and the Amazon is actually on Bremner, right by the ACC. And they're increasing their footprint. They're increasing their office space. They will still require office space moving towards the future. So something very important to keep in mind, 200,000 square feet alone just between Shopify and Amazon recently in this market. 2020, the biggest price increases were recorded in the 905 area, in particular in the Durham region. Do you want to know why that is, Kyle?
Why is that?
It was most affordable. In 2020, downtown condo prices decreased by 5 to 10%, where low rise increased by 10 to 15%. I think we did a video on that, didn't we?
Yep, absolutely.
We talked about the price cap. You talk about that growing price gap. That price differential will attract more end users and investors in the market in 2021. We know this. I was out showing properties to it back to back to investors this weekend, and I know Kyle secured an amazing assignment deal last week for our client. Was very, very busy on the investor side dealing, and even end users looking for opportunities to enter the market, because this is the time. And I said in a call yesterday to another potential end user / investor, was that if this product you're considering was on the market in 2019, we would be having a completely different conversation. This product would be selling in multiple offers, and we'd be talking about how you could win this. Now we're having the conversation. It's like, okay, what will be desirable in the future, and are the good items to buy in this market right now? What I mean by good items to market, what are the characteristics? I got a great analogy, another analogy. Kyle, here it comes. So let's pretend we're winners right now. Okay. So right now, the Toronto condo market is winners. And what that means is, yeah, I can go get a nice pair of brand name jeans, but they look like crap, but they just have a name on them. Now is not the time to buy the crap jeans with the name on them. Now is the time to go, hey, I found this beautiful brand name pair of jeans. I can't believe I'm getting it for this price. It would cost me so much more at Saks. Like this is a great deal. I'm going to buy this, and someone's going to go out and go, wow, those are great jeans. And you're like, yeah, got a good deal on them. That's the market we're in. You want to focus in on the product that is the best product out there. You want to you want to focus in on the high quality product, because if you go just for the lowest price option, but if the product's crap, you're going to be hurting when the market drops down. Those are the last units to rent out. Those are getting the lowest rents on those units. You want to focus in on the high quality stuff that is going to perform well, extremely well in the future. Regardless, that's the opportunity that you can get into right now.
And that means investing in AAA buildings in amazing locations. Now is the time to be buying, those jewel assets, because they're never going to be cheaper than they are right now.
Once in a lifetime opportunity. I shouldn't say life, but yeah, generational, lifetime, both same thing. This is the opportunity, because again, this will be just a statistical bump on the long range forecast, and everything is going to go up moving forward in the future. And the other item, and we've talked about it, but I don't think we've hammered down enough on it. By buying something today on, let's say, the resale market, for example, you can lock in then on that mortgage rate for 5 years. We do expect things to be low, but there is an advantage of locking into that now, and then you get that cost certainty over 5 years at a sub. You're probably locking in sub 1.8 because there are different variables that factor into rental properties, but you're able to lock in at this incredibly low rate. So that's an advantage of entering in now. What we expect to see in the price change in 2021 in 416, expecting 9% price growth in the condos. Detached homes, 6%. Townhouses, 8%. We saw things drop 5 to 10 on the condo side. We expect those to roar back up 9% in this calendar here in 2021. So the window to buy is at the beginning part of this year, and this is what I've been telling people. I thought we would have a little more runway in the opportunity. Kyle did as well. The bottom was in November. We're bobbing on the bottom, but to get 9%, things are going to go like this very, very, very quickly. And as vaccinations start rolling out and everything like that, yes, we're in let's say maybe a stricter lockdown, but it really hasn't changed that much. These opportunities are going to start disappearing maybe in 2 months, if that.
Well, I'm already starting to see
6 weeks
wars coming back to the market. It was a few months ago, and now, maybe 30-40% of listings are set up for bidding wars again.
Yeah, there was a great one that came up in Mid to West Side, and I was pissed off that had a multiple offers. They put it to it.
Yeah, exactly. And entry level for a lot of people starting out, beginning investors, might be common one was around 500 to 550,000 to get into the market. At the beginning of 2020, I couldn't get you anything for that downtown. Impossible. There was no way. Yep. But now there are actually opportunities where I can get you into a condo today for between 500 and 550,000, be it resale or possibly an assignment opportunity as well. They are.
Yeah, 100%. And in beginning of 2020, as you said, like the 1-bedroom price point, it started with a 6. We were like, wow, we've crept up into the 600 level. And I was doing a little jig looking at my portfolio. And now we're at 5. Five's a little tough, but I would say 525 to 550 definitely is achievable. But that range of 500 to 550, depending on the product, you can get something, and that will be worth $100,000 more in 2022. No doubt in my mind. So let's continue on this beautiful piece of paper. So the pre-construction market, what may surprise people is that this market has been balanced over the last 5 years. So there hasn't been overbuilding over the last 5 years. The market is based on net migration of 100,000 people per year, and which requires 42,000 homes, of which 33,000 are apartment buildings every year. Now, we did not have the net migration of 100,000 people in 2020, but again, that will be a statistical anomaly. We know Oh, here we go. This the next line, which we didn't hit it in 2020, but the government is committed to increasing these migration levels, and we know that. And as we've said in past videos, it is essential for our post-pandemic recovery is migration. Even before the pandemic, we were an immigration-based community, and there was a positive economic stimulus that came with individuals immigrating to Canada. Now, just that is now that's multiplied. That is so important to our growth. And the great thing is, what's going down south of us and what's going down around the world, again, puts us in the number one place. If you want to bring your family to you, we are safe and boring, and we are the place you want to be. And we haven't really talked about this too much. I was talking to a client the other day who's lived in Africa, who's lived in Europe, who's now currently in the US, but his family is relocating to Canada. They do have Canadian passports. Here's the thing. What makes Canada so attractive is that we're safe and boring. 100% we're safe and boring. But you do have access to the largest economy in the world currently. That's also English speaking, just south of us. So you can live in Canada, but still do business in the States. So you can live where it's boring, but when you want to dabble into something a little exciting, you can still check opportunities in the States. And then also on top of that, we were talking about education. Education is incredibly expensive in the US. Like if you go into top tier schools, we're talking about 6-figure tuitions in American dollars in the US. It's absolutely insane. But you can get the same education in Canada. So again, you can backdoor it through Canada. You can go get your affordable education in Canada. And then the opportunities are better in the States than they are in Canada if you're trying to climb up the corporate ladder and various things. So you could use Canada as a jumping point for your family. So I can relocate my family here if I have teenage kids, or put them through the Canadian education institutions, and then they can choose to then explore opportunities in the States when they're in their 20s, gain that education, gain that wealth, but then they still have the Canadian passport to move back here if they want to, or come back here and contribute to the Canadian economy. I don't think we've ever really got that much into depth in regards to the thought process. But if you talk to individuals that have relocated to Canada, these are things that they think about, because put yourself in their shoes. If you're in another country right now and you want to leave that country for better opportunities and safety for your family, where are you going to go? And what aspects are you looking at when you're looking at other countries? Well, safe and boring, number one, safe, boring healthcare. I'm not even at healthcare. Safe, boring healthcare is what you want. Oh, and then add a bonus, affordable, because their currency is Canadian dollars, not American dollars. Education, affordable. Then access again to the largest free market economy in the world, right next door. Why wouldn't you want to relocate here? So you got to put yourself in people's shoes in other countries. These are conversations they have at their dinner table. What country am I going to? It makes sense.
You're not giving up anything either coming to Canada. We have world-class cities, world-class education, world-class healthcare, world-class culture and arts. So, why wouldn't you come to Canada?
Oh, great example. If you want to, and then we'll go GTA, if you want to go to one of the top concert cities in North America, Toronto is, I think, number 3 or number 4 on the circuit. You have your big one, you have LA, you have New York. I think we're number 3 then. Then it's Toronto. You're not going to miss out on anything. You won't miss out on nothing. They're all going to stop in Toronto. It's gonna happen. They'll play at the ACC. They'll play at the Rogers Center. They'll play at the Molson Amphitheater. They just one a great example. Thanks, Kyle, for bringing that up. It's all going to happen here. So that's something important. And we've also talked about visas and work permits, and how it's affordable for for employers to open up shop here and everything like that. We're not going to get too much into that, but that's in our previous videos. Okay, so that was number 2. Number 3. unlike the resale market, builders price units on a cost plus basis, 100%. Like the resale market is based on supply and demand. The pre-construction market, the builder market, is based on supply, demand, and cost. Like they still have to build these buildings and then put a profit on these. And the issue is in the pre-construction market is that their costs continue to go up. For example, land costs are up 160%. Soft costs and construction are up 100%. And government fees, this is over the last 10 years, and government fees, charges, and taxes have increased 413%. 413%. It's essentially a tax. So that's what builders have to come into when they're building product. So if it's not financially viable for them to build a building, guess what? It just doesn't get built. And then that will constrain supply into the point where the supply and demand curve meet, which makes the price make sense for the builder, the building people to invest. So something very important to keep in mind when you're looking at the pre-construction market. And that's where Kyle and I have talked about. You either buy the dip, which is, we said 2 months, 6 weeks. Let's say you got 6 weeks left to buy the dip, if that. Or you're going to profit on the recovery. So profit on the recovery is, okay, you don't want to deal with the mortgage right now. You don't want to deal with your property potentially being vacant, but you do want to participate in the Toronto real estate market in the recovery. You look at the pre-construction market, and the builders are still offering attractive incentives for you to get into. And what I mean by that is you're getting extended deposit structures, you're getting lower deposit structures. So you're getting 15%, 5 over a 3 calendar year period to ease out, to smooth out that deposit distribution. When things pick up, that'll go away and it'll be 20% in 1 year. That's what'll happen. So there's still an opportunity to take advantage of the capital you're putting into the market. So capital putting in these pre-construction projects. And then what you want to look at, you want them to be built 5 years out. So that if we're looking at 5 years from today, we're 2026. When it's done in 2026, we're well past all of this and we're well into the recovery at that point. So that's where we see the opportunity in the pre-construction market. So let's talk about the rental market and what's going to happen in the rental market. So 2021 market. So without 100,000 international post-secondary students coming to the GTA, and with many tenants moving back to their parents, house vacancy rates increased to 3% in 2020. Still not that large of a number.
It's actually shockingly low, considering the population of Toronto.
Well, I think we all reduced our rents enough to keep the vacancy level low.
Sure.
But expect that vacancy rate to go back down below 1% in 2021. So again, if you go back to everything that was happening before the pandemic, we were sub 1% vacancy rate and rents were quite high. Expect those rents to go back up to those levels I'm expecting by 2022. The remaining tenants played musical chairs with landlords, moving from apartment to apartment, resulting in rental decreases of over 10% or more in some cases. I can definitely tell you that, or more.
We saw that happen a lot. There were a lot of tenants who were upgrading their units. Before
we've seen that.
All 1 bedroom. Now they could upgrade to a larger 1 bedroom plus den for the same rent. So good on them. Why not take advantage of the opportunity?
Yeah, and I had it even on my personal unit. I had a studio. The studio is probably the worst performing asset during the pandemic. But the person that ended up moving into my studio, they had a roommate, and they're like, you know what, the price point of the studio now has come to the point where it's affordable for me not to have a roommate anymore, and I can have my own space. So they moved in. So yeah, you had a reallocation of individuals due to the reduction in the rental rate. But again, that's not staying. The provincial government has introduced a rental increase freeze in 2021 for all existing tenants. Therefore, we will see minimum or no increases in rents in 2021. With vacant and new units available in 2021, landlords will try to move rents higher by a minimum of 5% and expect a 2-tiered rental market. So something to keep in mind with those aspects that are coming on the rental market. But 2022 is when we expect things on the price. Well, we're going to see 9% price growth at minimum in downtown condos in 2021. And I would see the on the rental market, you're going to see a big jump in rents in 2022 moving forward. So the opportunity, the window, the profit on the or buy the dip. It's 6 weeks left. 6 weeks.
It's closing fast.
Yeah. Then the deals won't be as good. And why is that? Let's think about it again. Even though if you open I can say I was a little spooked yesterday. You know, I'm not immune to this. I don't think any of us are immune to these things. You know, sometimes that the light is too bright and we have to look and we're like, man, it's a little depressing. It was a little depressing yesterday. You know, I'm like, what's going on? You know, and I got my blinders back on today. It's all good having this conversation. Everyone's getting vaccinated. It's all going to happen by September. Needles are going into arms today. We are just in the thick of it. That's all it is. We're just right in the thick of it. And that thick of it is going to end, and it's going to end sooner than you think it's going to end. It was 6 weeks. There's 52 weeks in a year. If it's another 6 weeks of lockdown, what's that an actual 52-month period? Again, I shouldn't. If I was running a restaurant, another 6 weeks is absolutely devastating. I shouldn't say what's that. That every week is costing me tons of money and with no revenue coming in. So I don't want to put that into it. But if you took again the bigger picture, when we look at the real estate market overall, it's minuscule on the real estate market. So that's where your window is. And as people continue to get vaccinated, things are going to open up a little bit more once we get out of this current lockdown, and all those savings are going to be gone. So I'm not pushing. Really, frankly, I don't care if you buy something next 6 weeks or not. But I'm just telling you, you're going to regret if you don't buy something in the next 6 weeks. I was on the phone with a real estate agent. I said, just buy something. Just buy something. You're not going to regret it. So should we leave it at that, Kyle? Just buy something next 6 weeks?
So,
you don't cry to me in 2022 when you didn't.
Exactly. Don't try to time the bottom. We've said that countless times.
The bottom already happened. Bottom has already happened, guys. Bottom's done. Happened in November. I'm sorry. That's when it happened. And the investors have flooded the market and buoyed the bottom. And now people are looking at opportunities. They see the light. They see the opportunity. And check out our bank stock video. It happened in the bank stocks. And it's happening here as well. We have low interest rates. We have a great environment for people to take advantage of. You're going to get crap rent right now when you buy it, but you know that's going to go up in the future. And we have our formula which buildings to buy into, so you're not hamstrung by that rent in the future. I can go on and on and on, but I'm going to stop it right now. Everyone, thank you so much for attending. Reach out to Kyle or myself if you are interested in taking advantage of the next 6 weeks in the buy the dip. Otherwise, we're going to have great opportunities on buy the recovery if you don't want to get caught up in dealing with the hassle of owning a rental property in today's environment. Okay. Thanks so much, guys. We'll talk soon. Bye-bye.